following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a great Wednesday morning. And we're going to have a hurricane. I'm actually going to go down to the beach on Friday, hang out with a friend of mine in his place and protect it, which is going to be interesting. It's kind of like a little bunker, so not that concerned, but it's going to be nice to see all those things. And I see some of you guys in the den are talking about the the Kerala situation. Yeah, I'm kind of sitting on the sidelines on that right now with the barbecue hut. And Kerala, you know, those Outer Banks are kind of getting a little precarious right now. Don't ever know what's going to happen there. You know, these storms could hold their power, and there's a lot of iffy kind of Outer Bank situations out there. But I think this is supposed to hit a little south of there. But again, any type of massive wave environment will just wash right over the highways, and hope nothing bad happens. Take a look at PepsiCo. Talked about this one being a really strong stock, hitting some targets up top, 109.98. Talked about that the other day. That's where you got to be willing to take some weight off, and now we kind of had a little bit of a pullback off of that. Got some fundamental news out on it, and in an uptrend, you know, even though we hit the targets, you still have a chance to buy support. Bottom of the profile is 106.63 on PepsiCo. So now that would be kind of up, you know, very strong stock in an uptrend support type area, looking at PepsiCo. And I don't know if you guys, while I'm thinking about it, caught the debate last night, the very, very important vice presidential debate. I don't even know why they have those. Picked up some good tips from Pence, though. It's just not even plausible deniability. So if you guys ever call me out on a bad trade that I've suggested, I'm just going to say, I never said that. That's not what happened. How do you defend against that? Somebody's basically just completely denying it. Anyway, if you guys watched it, you know what I'm talking about. Take a look at a couple other things that are relatively important. Let's take a look at Deutsche Bank. So had a little bit more go-go juice in it. You know, there's supposedly hints of some folks coming to the rescue on this one, but it is what it is. This is your selling point. We talked about the big inflection points, 1265 and 1366. That's, you know, again, these things don't go in a straight line, but that's your new resistance area. And a gentleman called in the other day. It's hard to sell things in the hole. Your probabilities are relatively low, especially if you don't have a chance to play defense. And, you know, I think you've got a kind of downtrend resistance type trade here coming up around 1366. We'll have to wait and see how this opens. I think we've got a real print at 1325 right now. But, again, kind of in no man's land, except for the ultra long-term trade, which is definitely still south on Deutsche Bank. I see Jay still hasn't given up his day job there. Here we go. Let's look at the British pound. Let's get that up. Here we go. And let's migrate to it. So, you know, not a lot of good things happening fundamentally for this particular currency. 127.22 is where we're printing right now. And here's the daily. You know, again, kind of getting some momentum after we crossed the 130.19 border. And still no end in sight here. No way to play defense on the intermediate or long term. Here's your 240s. Again, this is really the only inflection points that I can imagine using to pick a battle. You've got 127.31 and 127.89. So that's the bottom and the top of the box here on the profile on the British pound. While we're on currencies, let's just hit this really quick. The yen. And I thought we were going to have a flush here on this one below 100. That hasn't happened. We're kind of reaching back up into, again, downtrend resistance, 103.52. I hadn't been super interested in going short this product, but was really thinking we might have a better opportunity below par there at 100. Here's the daily, kind of closed above yesterday and kind of come back and use that breakout, and 102.70.71 is support here. So the big inflection points on this one right now, 102.71 and 103.52. So what does that mean? How do you trade this? So not a huge fan of being short this, but if you step back and look at, the trend here, making and getting up in, making a new high here today and getting up into 103.52 would be resistance in a protracted downtrend, lower highs all the way down. So we could kind of compress down again. So if you look at this, ignore my personal thoughts on not being short this. Getting into that inflection point is kind of par for the course. In a downtrend, you're kind of raising your head up into a lower resistance area. So by default, that more than likely should be sold. But again, I'm a little partial to this breaking par at some point before the massive scoop up. I never said that. That's not true. Here we go. Australian dollar. Again, had some nice little bounces here off the 75.87 area. I think this is still going to be the case, this neighborhood. And I think ultimately we are going to have a weekly close above 76.89. That hasn't happened yet. Canadian dollar. Becoming devalued as the price of oil goes up. This is kind of weird. So Canadian dollar continues to rally. 132.48 is a big number up top, along with 133.107. So this is kind of interesting. Maybe Larry will kind of give some comments on this. Let me get this blown up so we can see it. So oil is kind of coming up into, and let's look at oil really quick before we get deep into the Canadian dollar. Here's oil. Here's the November contract. So we talked about 49.75 into 50. Juan and I were actually speaking about this yesterday. You're right up here now. You're right in the neighborhood on those two inflection points. And we're going to talk about that relative to the Canadian dollar and what the leverage trade might be on that product when we come back, folks. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And we're going to finish up with crude oil here. So, on the weekly, definitely got in that neighborhood. Again, if you've been long, I haven't been long, but if you've been long, this is something you got to really pay attention to right now, getting into these daily unfair highs, weekly unfair highs. Here's the daily, 50, 40, 49.75 weekly. So, again, it's kind of a near-term high that was hit before. Had a good move here, had a huge percentage move in crude in general. And we were looking at the currency, the Canadian dollar. So, as this thing rallies on the chart, that means Canadian dollar is becoming weaker relative to the U.S. dollar. Would have figured, really, that this had been pulling back before now. So, if you're looking at this, we might be able to, trade a breakout on the Canadian dollar above 133. Based on crude possibly relaxing a little bit and coming down below 50. Everybody thinks, by the way, crude's going to be stuck between 40 and 50 forever. When everybody gets on the same side of the fence, that usually means that won't happen. But again, you've got some resistance on crude, and the Canadian dollar may move a little higher here based on that. Let's take a look at the U.S. dollar. I don't think this is real time on this machine. Let me pull up our real time. All right. The U.S. dollar, again, still love this trade, but got into that 96.26 yesterday and kind of backed off of that neighborhood. So, again, you got some resistance, some long-term resistance here on the POC on the weekly. So, again, talked about taking some weight off there and maybe waiting for another support area to appear on the daily to really catch this again from the long side. Let's take a look at somebody had then just saying the weekly unfair highs have worked well in the last few months on, I guess, a lot of different products. As we look at the long term on the S&Ps, that 2133.5 area, that's, again, a weekly inflection point. But what I want to say, I've got a couple of guys, we've talked about automation. We flashed something recently strategies. Tom and I talked about them one day. You know, we base a lot of things around probabilities for those signals, so to speak, and we're going to continue to talk about those. We just getting a little bit more prepared to speak about them again right now, but they've done quite well. They work on a lot of different trigger mechanisms, and if we then them basically on the long-term inflection points, you know, you've got to like looking at only 6 different products in that portfolio and just kind of basing the trades around the longer-term inflection points. You know, those are few and far between a lot of times. So we sped up things a little bit, but what I wanted to say is we constantly have, you know, a couple of guys in my company that are just focused on scenarios, what if scenarios, doing back testing. There's a program called Wealth Lab that we've kind of started migrating into. If you guys want to kind of look that up on the internet, it's been in force for a while, but it's mainly for coders, and you know, you can basically copy and paste your C#, C++ code right into it. And you can do a lot of nifty things with that program. We've actually written a small back testing program, but I actually like that one better right off the shelf. So some of the scenarios, going back to something that somebody said in the den about, you know, weekly inflection points, we're trying to get some stats out that basically, you know, the proof's always in the pudding when it comes to results. You know, I can talk about these things all day long, and we can suggest ideas and then kind of move on and go into other topics and then come back to them every once in a while, see how they worked out. But, you know, knowing that, hey, what if, talking about what if scenarios, what if, you know, we do studies where when we come down into these weekly inflection points from above, from a certain percentage move down, you know, what's the probability and what's the, you know, percentage moves that happen off of these inflection points from a bounce standpoint, being that in this case, you know, the S&Ps have been in a protracted long-term uptrend. I don't have to tell you guys that. But if that's the case, and we have these pullbacks into these weekly inflection points, what's the probability that we're going to have a winning trade, and what type of a percent move would be off of those weekly unfurlows in this scenario? So, you know, those are things that I think we've kind of left out of the equation as far as, you know, seeing, you know, what's the proof in the pudding, what's the results. So I've got a couple of guys kind of putting together some stats on that right now, because I think that would be very cool. I'll shut up now about that. All right, here we go. Let's take a look at the notes really quick. Here's, you know, again, I'm not a massive fan of being long notes. I actually tried to catch that bid at 130.29 the other day. And, you know, that's kind of take the medicine type situation and just sit tight. I'm not a big fan of shorting these treasuries. But that being said, we had a similar situation yesterday happen with gold. I was waiting patiently, thought we had a big number there, 1295, 1296. That didn't happen. Got to take the medicine on stuff like that. I actually gave myself a little bit more relaxed stop than normal. I also listened to Larry's show about 1288 possibly being a little bit of a kind of a line in the sand there. So I put my stops. I gave it kind of a generous stop situation more than I normally do, because that was a weekly inflection point, and I personally had to take that hit. That's okay. Now, you know, the bad news is for the longs, which now, you know, based on what I just said, should be out of the trade on trying to buy that bounce. You got a profile on the daily appearing above price action. So, you know, you got 1296 sitting there. You know, that's going to be kind of a wait and see for a long-term place to pick the battle. But right now, that scenario in itself on the daily is pretty damning for longs. That's usually a harbinger of bad news for the long trade, as it is inversely on the short trade when it appears below price action. So, you know, gold's a wait and see for me right now. If you guys, I think Tom is has been calling for some sell-offs in this. He's obviously been spot on. That was a trading opportunity in my book around 1296, and I think the long-term view that he had has been, very cool. So, again, this show, we try to just present probabilities when they're happening, and I severely rely on these profiles for my personal trading and for some of our automated strategies. So we'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. As I was digressing before the break there. There's a lot of cool things you can do with the scanner. I really like to take, after the close, like yesterday after 4:30, whatever, I like to take a look at some sorts based on long terms, kind of put some things on my radar screen, and just kind of be aware of those setups, those longer term setups for the next day, kind of see how things open. You really, after you find some setups that you like for instance, I'll, a lot of times I'll look at stuff trading below profiles in the long term, and then kind of edging up into the top of profiles on the daily, which means kind of like Custer's last stance on either it's going to continue to sail south, and that was just kind of a lift up into the final resistance area, or not. I'm going to stop out. And it's really cool to let, if you find some opportunities, let's just say on the short side, based on, kind of previous days research, and let's just say the market gaps up significantly. And that's what you're really, really, really hoping for. And then you kind of see how those stocks open that you had on the short radar screen. And if they kind of look sick and they're still kind of having trouble there, a lot of times the market doesn't just gap up and keep going. You may have some kind of pullbacks in scenarios like that, and you got to look at the S&P kind of, main framework in general as far as the profiles go for the index. But, those things can kind of really, really clarify some of the, and at that point, you kind of really use the scanner to drill down into some super ripe opportunities and there's no way, you can't surf the charts 500 or 600 of them at a time trying to find these setups and look at all the time frames. It's maddening. And that's why this thing was created. A lot of institutional guys, on Bloomberg, this very expensive thing over here that Tom and I hate, of course. That concept was why this scanner was created, because they're like, John, we love this stuff. We use it every day. And there's literally thousands of people that use this on the terminal every day. We've got kind of an unlimited licensing agreement with Bloomberg for the indicators. And, this kind of helps them not have to really surf, drag and drop, blah, blah, blah. And, kind of they're all about putting money to work. They never seem to find a way to really utilize it all, but this helps them find it's an idea machine for them. So again, they don't have to do these trades. They can find these opportunities, but at least gives them some kind of fodder. And more importantly for those folks, an audit trail. So, they come back and say, okay, Mr. Johnson or sub-fund number 1 or 2, they say, look, we did the research. This is why we did the trade. This is a credible source. And here's the facts. And this is, why it worked out or why it didn't work out. So again, it's a lot of things we don't talk about on that level, but they're interesting things to know, in my opinion. All right. Here we go. All right. Okay, so looking at the Nikkei, this is the situation here. We're coming up into the 16,935. It looks like, what are we at? High is 16,895, so very close to that, kind of backing off. Got some resistance here on the Nikkei, so where's this thing going to go relative to the yen becoming weaker relative to the dollar? I think we're at some inflection points on the yen right now, so the yen could get stronger, come off a little bit there, maybe some kind of trade opportunity around 16.935 area on the Nikkei, on the December contract on the future. All right, so let's take a look at silver. See how this puppy acted on the, yeah. So again, I considered this always a little bit stronger probability situation than gold. That was a stop out. It happens. The market's always going to be open tomorrow. You always got to remember that. This is, you don't have to catch every single move. And if you're short, God bless you, that's awesome. But again, this is kind of a wait and see for me. Copper. We talked about, taking some weight off around 221.32. Thank goodness. That's kind of similar to PepsiCo we looked at earlier. Just kind of, it did what it was supposed to do. Now we're just kind of waiting. And this got a little bit lower yesterday than I wanted to see it, and now it kind of like, hit that little bit of a lid there, 20. So I want to see this actually have a daily close again, but above 217.95 or come back into 214.57 to trade copper again, and that's a very good floor down here, 214.05 to 214.57 on copper. But again, I don't mind getting back in the trade also above 217.95. So when we're in these no man land areas, there's just nothing to do. Trying to block out the short side on this particular trade. Let's take a look at the financials. All right, so this is the scene on the XLF. 1905 still support on this one, but let's go into a stock we really never talk about. It's a little-known company called Wells Fargo. We're going to take a look at this one, and again, guys, a gentleman called in the other day, talked about Deutsche Bank, possibly buying some puts. Talked about that. Wasn't a lot of probabilities to get into that type of short trade that far in the hole, but Wells Fargo, really on a relative strength basis, and just the basic fear out there. And now they're saying, what did I read this morning, which was kind of funny. Where was it at? I'll pick it up after the next break, but it was kind of funny. Some of the statements coming out from the credit agencies on Wells Fargo. I think it was perceived reputational issues. So what do you do with Wells Fargo now? It looks like it's printing a little bit higher this morning, 43.94, not much higher than where we closed yesterday. One of the things too, like general trading 101 stuff that we don't talk about a lot is, stocks in a downtrend or an uptrend. Let's just take downtrend, for example. When they're in a downtrend and they kind of gap up, a lot of times that will find more sellers just by default of people going, wow, this is my last opportunity to get out of this thing. And it kind of feeds on itself. And in the same sense, sometimes, the specialists will gap something down in a downtrend to try to find buyers. So we're going to talk about that a little bit more when we come back. I think the overriding fundamental situation of this one is just no way to fight it, but we'll continue when we come back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Here's the Wells Fargo thing I was laughing about. I guess they still have an A minus rating, investment grade still. Cited potential reputational damage from the recent regulatory actions and fines. These guys are always after the fact. We were first here on TFNN slamming this company. First. You heard it only on TFNN. Anyway, that's a disturbing little organization. Just go into even if you don't have an account there, just walk into a branch and just check things out. The demeanor of the employees now. They don't have their usual attitude. Anyway, here are the lawsuits coming now. Here we go. J.P. Morgan. Again, thank God Jamie Dimon's coming to the rescue in the Deutsche Bank situation. That may be why the stock's lifted up significantly. Again, this thing still poised, in my opinion, to go up. 67.77 is the target, and probably even higher on this thing. They got it right. Not morally. You know what I mean? Home Depot. This is a situation I've been following. We had the breakdown on this particular stock. Been a pretty good protracted uptrend for a long time, actually. But right now, this week, you've got a profile appearing above price action. You've had that break before. There is still some more downside to this particular stock, and I literally love how it's been defending this 129.55. We actually talked about that the other day, still not having daily closes above, and I think easily we can sail back down to 126.46 and actually a lot lower. So this is one of my star picks right now. It's been on the radar screen, and I kind of got this right out of the scanner. Let me read something here. Here we go. So it's just one I'm kind of following. 129.33 looks like we're printing up a little bit this morning, but again, that's kind of your closes above 129.55. Either have to take stops, take a break. You got 132, 129.55, and 126.46 on Home Depot with the leverage towards the short side. All right. Here we go. All right, so one of the things, let me go back to the S&Ps for 2 seconds here. So we're up 5 points this morning, pre-market. Not really significant. Main inflection points still around 2150, 2159, and 2133. Let's go into the scanner, and let's look at breakdowns. This has been pretty populated lately. Kind of shocked, actually, amount of stocks relative to profiles breaking down. We've picked out a couple of them that we've recently talked about, but just kind of an indicator in itself. The breadth situation is what it is. This is, again, an aggregate type scenario. Kind of starting to lean a little bit towards negativity here. And again, some of these stocks starting to break down, which is kind of interesting. And looking at downtrend resistance, we've caught a couple of these lately. Discover Financial Services. This is an XLF stock. I really like how this is acting. Trading below profiles here, 56.78. MTB. Let's take a look at this one. Got a little intermediate resistance there around 116.66. And taking a look at downtrend reversals, these are stocks that have kind of been in a protracted downtrend. Checkpoint Software starting to poke its head above here on the dailies, but really got more so weekly resistance here. So, you know, what overrides this? We always talk about longer term time frames take precedence over shorter term. So Checkpoint, CHKP, in my opinion, you got a chance to really kind of whack this again around, even though it kind of was on this reversal situation, drilling down into it, you got to still kind of factor everything in. You got 78.23 as a resistance area on Checkpoint. Let's take a look at Micron while we're talking about stocks in the NASDAQ. All right, so had some earnings come out on this one, and let me just see what they were. It says down 4.6%. So let's see where it looks like we're printing this morning 1760. So kind of had a decent sell-off yesterday, and now looks like we're printing back up this morning. 1760. Okay, so here's the 240s on Micron. Here's a stock in an uptrend long-term, had broken out, and then kind of, you know, this is kind of cool. And, you know, I really like to see profiles kind of change direction. This was obviously one where I think we had been in a protracted downtrend since, good gracious, January, really, 2015. And then back in May this past year, we really started breaking above. And then we got the back to truck up situation when the Navigator was crossing zero at the same time, and this thing was retesting those highs. That's the very, very ultra powerful trade right there. So, you know, we're still in an uptrend. You know, we kind of use these dailies to regulate that uptrend up when we kind of figure out the major change in tone. And right now, you're basically coming down and touching 1717 and bouncing. So this is still support on this particular stock. It looks like, you know, the shorts are still just in a crappy situation. I was going to use another word there. But, you know, we bounced off 717 before, and we kind of like are defending it again. So I don't think Micron necessarily is a short. Don't get caught up in some of the fundamental news out there. It looks like that's still a buy support situation. I'm sorry. Let me pull up. I wanted to pull up Darden Restaurants here. All right, so had some earnings, and it looks like this is a real print, 6166. So we're, you know, kind of down in the middle of this profile down here. This is our daily. This has been wow, what a cool range this has been, huh? These inflex. I mean, this profile was outputted at this state back here on the dailies back in 1st of August, and we have just used those areas to trade a pretty wide range on this. But, you know, what do you do with this now after earnings? You know, the long term's still down in my book, so selling resistance and selling breakdowns on Darden Restaurants is still in order. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Okay, looking at natural gas, this is the November contract. Here's your weekly. I wasn't supposed to do that. Here's your weekly. And, 3.033. Never really got a weekly close above there. But we, the stock, the contract obviously, and this is kind of cool. We talked about this on Micron a couple of minutes ago. Breaking above profiles here, coming back, kind of retesting, and then Navigator also down below turning above 0, and that was kind of like really confirming situation coming down here and giving us a little stress down here at 2.802 on the weekly unfair lows, giving a chance to take profits, buy support again. I think that you have to look at this from the long side still. So, the question is, we've kind of gotten back above the POC here on the weekly. Not a super fat profile here, but here's the daily on the November contract. I don't see a ton of leverage here, except that, you could use that POC as a support here. I really can't look at this trying to short natural gas, so I'd be looking for long opportunities. And you definitely have, 2.918, something to pay attention to here right now. I like how it's kind of reversed, gotten above the top of the mountain on the weekly, and then kind of retesting. So, looks relatively okay to be long here. to go back and retest 3.033 and possibly even higher. All right, somebody else asked about GDX. Let's take a look at that one. You don't want to force a trade either. Talking about natural gas, I mean, I like to get a little bit more leverage than what I just talked about, but it's definitely something I would be blocking out the short side on. So, obviously, the price of gold. This is the VanEck Vectors Gold Miners ETF, and this kind of was caught breaking down, I guess, before gold got going below 1296 yesterday, this week, put it that way. So it was sitting on the edge of the cliff before yesterday, and this is yesterday's close, by the way. This doesn't show today's pricing. So the question, I assume, is what do you do with this thing? So here's the daily, here's the weekly, here's the 240s. And this is pre-market pricing here. It looks like 23.83 right now. Got a pretty thin profile here on the 240. So I kind of see this as a no trade. I'm not seeing a lot of, major things to lean on down here. And I definitely wouldn't want to short this in the hole right now. So I think you got better things to spend mental capital on than GDX right now, put it that way. So could look around here. Yeah. I mean, I think you just got to pay attention to gold and those inflection points that we looked at earlier in the show. A couple of stocks I want to cover. Twitter. All right. So here's Twitter on the long term. I was really, really hoping this thing would ultimately test 1498. We were getting some of those weekly closes against us at 1890, but then the fundamental news kind of blew this out of the water. What do you do with Twitter now? Here's your daily. Your daily was predicted ahead of time. Here's your inflection points. Again, waiting for the market to come to you. You got 23.98 and above to play defense there. And I think we could come back to the 2106 area. Thanks, guys. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.